Welcome back to the video. So this is going to be a Bitcoin market analysis video. It is just going to be purely Bitcoin and nothing else for this video. It will be a short video than the others. I will start doing these a little bit more often because obviously a lot of you guys do want this. And I did actually see somebody say that they want me to use more indicators. Now, it's fine to use more indicators. However, you've got to bear in mind that a lot of the indicators that you can use are obviously lagging indicators. So while the EMA ribbon and the EMA ribbons are great because they're supports and resistances, you've got to bear in mind that, you know, the Bollinger Bands, the MACD, a lot of the other indicators, they are all just lagging indicators. Yes, they might show some downtrend or some uptrend. It can show you which way the direction's going, but you've got to also be wary that they are obviously lagging. So in a market that is obviously, as we are currently in, is just practically a straight line up, this is also the only thing they're really going to show is bullish. You're going to be wary of that as well. So first off, let's actually have a look at what's been going on our chart firstly. So we take the 4-hour chart for example firstly. I obviously drew this out and I told you guys that it was unlikely this was going to happen. So if you want to draw your cup here, handle here in the previous video, if you haven't watched that, give that a watch. I drew this out and said this was obviously not going to be a cup and handle pattern, purely because of the fact that it is too rigid of a bottom. It's not really a nice like smooth curved bottom. A cup and handle pattern would normally have like a nice smooth bottom and a nice trend going sideways, and then we break, retest, and we go up. Now, that's not what's happened here. We broke, and if we take a nice line, draw it from here, draw something like that. We actually didn't really retest. We came down, we didn't touch the line at all. And regardless of how you want to draw this line, even if you draw it like slightly upwards, that's still not a retest, because you need to touch this line as well. So we haven't actually retested that. Now, obviously, for those of you who may have looked at this previously and gone, well, is this a flag pattern? If we drew something like that, would that be a flag? This cannot be a flag because this is more than 50% of the way down. So I also thought this was a flag at the beginning. This is more than 50% way of the pole. So if the flag's more than 50% of the pole, then that's obviously, you know, it's not going to be a flag. And then exactly like what we did, we came upwards, and then we just dumped back down again. And that's where I was like, okay, this could become a handle pattern. Again, like I said, it's unlikely it's going to be that. So we trended upwards, came down, and again, we didn't retest, come up, and again, we basically just been trading down. Every time we come up to these tops, we keep coming lower and lower. We just dump, up here, dump. It's a very, very low liquidity area. So we've gone 30-minute, for example. Every single time we've come up here, they've just been really fast dumps, so about $2,000 down. $2,000 down. $2,000 down. And this is the most recent one. This happened this morning. When I first woke up, I saw this. It's exactly the thing that, obviously, is an indication that the market is now losing momentum. We are practically just struggling to go higher. There isn't really much higher uptrend for the market, and it's struggling to set a higher high. If we take a look on the 4-hour again, we come up, we set this high up here, about 74-ish, 73,800 or whatever you want to call it, and then we came down. Let's see, we've had this little bit of a kind of, let's say, correction, about 18%. We've come back up. We haven't really done much. We've managed to get up to 71,800, and then again 71,400, 71,600. We haven't actually gone higher than that, and we are now just starting to set lower lows. Now you could argue, is this a flag? Again, this is not a flag. If you took the pole from here, more than 50% of the way down. If you took the pole from the bottom on the daily, let's just quickly switch to the daily. Again, it's not really a flag. So for flags, normally you have a trend that goes upwards like this, and then you have some sort of like falling wedge like that. Like that, that's your flag, and then you can take your measure and move, and you move upwards. Or you have something like this, where we go upwards, you put like some sort of triangle pattern in, and then from there we break, and then you can move that line upwards, and again move that line upwards. Now in this sense we haven't done that. That's not what's happened here. So again, that's obviously not going to be a flag. So where is the market going? Because it now at this point in time it just looks like nonsense trading, doesn't it? But this is what I said in the previous video. It looks to me like, since now the halving, like I made the halving video recently, the halving's actually not far away at all. The halving's at what, maybe April 20, give it like plus or minus 5 days, 25, maybe even 15th, because it's estimated obviously. If you take that 10-day gap, this is roughly about where we're going to trade to before the halving happens. Now, I did say that since we also had this run up, it's likely that also we need a correction. We haven't had a correction. We've had a 20% correction. That's fairly decent though. But I expect some sort of consolidation in this area for at least a small amount of time at least. At least a couple of months would be a nice consolidation range. So this is where I brought to attention that this could be a head and shoulders pattern. So if you wanted to draw something like this as the neckline, you can have moves above the neckline before the pattern is made. It's only afterwards, after it's made, you shouldn't do that. So I said this could be most like a head and shoulders pattern. Now, a clean head and shoulders pattern would be something like this. That would be a nice clean head and shoulders pattern. The only thing is here, obviously, we don't have to have a clean one. It can actually end up being something like we come down, we come up, and then we come, maybe have some nonsense trading like what we're doing, and then we come down, put our head in, maybe put like a small shoulder in, have some more nonsense trading, and then we put a head in, and put a shoulder in. It can also be like that, so you've got to be wary of that. And also you've got to bear in mind, while this has taken basically, give or take, slightly less than 3 weeks, the head doesn't have to take that long. It could be a much faster dump, much faster uptrend, much faster dump, much faster uptrend as well. Prior to the halving. So that could be something that is likely to happen as well. And that would be something that would give Bitcoin a lot of strength in the market, because it would be a good sense that obviously we've come down, we retested, and then we've come back upwards, and that's a good sign. Now, as I said, I wasn't going to do many indicators. I'll go for a couple, but we're going to go do it over the Binance chart, because the Binance charts, I kind of prefer it on here. The indicators are a lot easier to access, and I'll show you guys what settings I usually use for indicators as well. Alright, so if we go up to your indicators, for the MA ribbon, I normally, because we're doing it on a longer term time frame, these are the settings I normally tend to go for. I go for 20, 50, and 200 for the MA ribbon, so we'll go through that first. So for the MA ribbons, if we go onto the daily time frame, the MA ribbons, for those of you that don't know, are basically act like support. So as you can see over here, that to support and resistance. If we want to, can we full screen this? Oh, we can. Right, that's cool. Okay, these act like basic support and resistance on this chart. We have obviously, we've come down, we've managed to come back up straight away, because this is obviously support. It's decent support. We have a bounce off the MA ribbon. We've come up, and we bounced first, and then we came back down. Crossed below, came up, we struggled to get above, came back down, struggled to get above, we stopped on this candle, and then we went above. And also again here, it's a good sign that we bounced on this candle over here. That's what the MA ribbons are. Now, if we suspect a head to be formed, or even some trend downwards, or anything at all, down to here, that'd be a decent trend, and then maybe we go slightly below, because normally the candles do go slightly below the MA ribbons. If we have a nice trend down and we maybe come down to here, 56-ish, that is a very good area to go to, because again at 56 there is some support down here. It's not 56, I am being an idiot, right? 56 down here, there is some nice support down here, and if we do trend downwards to about here, that'd be pretty good. Or if not, we're going down to 52. So on the daily time frame over here, our MA ribbons are currently sat at 68, 62, and then 43.5. This is a big dump. This is a big gap. That is our 200-day moving average. We are still above it, so that is good. If we have a nice trend down to maybe the 56 area, maybe 56 is about there, or even 52. That'd be pretty good. We only go under for a little bit, and then we come back up. So that's likely that, obviously, like I said, it could come down. It might come back up really quickly as well. And that's why the head and shoulders that obviously we had drawn, it's like that if we do come down, we come down quickly, and then we come back up again quickly. Because obviously now the halving is starting to get closer. So this is the interesting thing to look at for the MA. Right, if we go for the other indicators we've got here, get rid of the MA. EMA, I tend to, for the EMA, why does it show me the moving average ones? Oh, there you go. For the EMA, right, it depends on what you want to go for. The reason why I like using Binance is because these are actually pretty good settings. 725 and 99 is actually pretty good settings to begin with anyway. So I normally leave these in, and I just won't change them, because these are alright. And also you've got your sub indicators on Binance as well you can go for. We'll go through those too. So go for this first. I'll show you the EMA ribbons. I don't want to put like a bunch of nonsense on the screen because no one's going to have a clue what's going on. And also, by the way, I want to take something else to attention. If you look down here at the volume, if you take a look at when we're moving up previously on the daily chart, we have a load of volume when we're going up, right? There's a load of volume dumping down, a load of volume going up. There isn't actually much volume on this chart, which is quite concerning. So if you take somebody, right, let's just quickly, we'll get the Samsung notes back out, or the Samsung screen right back out. Let's just take something into consideration here. If we change the color to, I don't know, we'll go white. Let's just take something into consideration here. If there are 0 buyers, wait, wrong one, right? 0 sellers, right? I can't spell because I'm an idiot, right? Let's say there's 0 sellers, but there are 10 buyers. All right. 10 buyers. That gives us our high trend up here, the high amount of volume, okay? Because there's nobody selling, and there are a bunch of people willing to buy, and that's why we get such high volume. Now, if you take, for example, right, there's only one buyer over here. Let's say there's one buyer. There's much less buyers, but still, no one's really willing to sell. 0 sellers. That's an indication that the market will start trending up regardless of the high amount of volume. We don't really need much volume to start trending up because there's not many people willing to sell, and if nobody's willing to sell, the price can't really come down, if that makes sense. If there's very, very small amounts of sellers, but there's a high amount of buyers, that's an indication the market can only really go up. And that's exactly what we've experienced over here. There aren't really many people buying. As you can see, there was a load of people buying. The volume is absurd. Like 10 billion, 14 billion, 16 billion USDT. And down here, how much are we getting now? 3 billion, 2 billion at peaks. It's not really much volume compared to what we were putting in previously. And this has been going on since we started trending upwards. We haven't actually had much of very much volume. So this is an indication that the market is practically just going up without much trend. And without many people actually willing to buy. And that is something to be wary of. Because right now there might not be any sellers. And there is practically mainly just buyers. But you've got to remember when the sellers return, and obviously again there's not many buyers because there's not high enough volume, it's likely that it'd be very, very easy to send the market back down. You've got to be wary of that too. As let's see, over here we had a load of sellers, a load of buyers, the market was going quite well. Over here there isn't really many buyers or many sellers over here, so you've got to be very wary of that. EMA ribbons, right? Firstly, EMA ribbons on the daily chart are completely and utterly useless to most extent. Yeah, they can be useful to some extent. You can predict bounces. So I had a bounce over here on the 99, bounce over here, we came below, struggled over here. Other than that, they don't really show much. Now, what I like to do for the EMA ribbons, and this is the only thing that I actually genuinely like about the EMA ribbons, is this. So if you actually take a look at this, and I discovered this, well, I didn't discover it, but I mean, like, I figured this out myself. I didn't look at YouTube videos or anything like that. Every time the yellow, or the shortest one, so in this case it would be the 7, every time the 7 crosses through a candle, we have a nice uptrend. And every time we cross below the candle, again, we have a nice uptrend. And again, we've crossed through the candle. So we cross through the candle, we dump, cross through the candle, we dump, cross through the candle, we dump, cross up through the candle, we go up. And that's an interesting thing here. And as you can see, we've gone through the candle and we now start dumping again. And also another thing to be wary of on this chart is previously we bounced on the 25 EMA. We bounced on 25, bounced on 25, we went slightly below. Over here, we can't really say the same thing. We've gone down. And this is where it becomes that the market is starting to put more of a weakness in. Because we came up to similar price levels. We've had dumps again. But over here, we've practically just come down and we haven't really gone anywhere from here. And we've come down, we struggled, and we've come down lower. And we have practically closed a candle below here on the 4 hour. Almost. This candle is an hour and 34 minutes away from closing. If this closes below the CMA ribbon, that's likely that the trend will continue going down, maybe even down to here, or slightly below. And that would, for us, be quite interesting, because on the daily time frame, that could give enough room for this candle, this EMA, to cross through the red candle, and we could actually dump down. And again, that would be a good indication that we form a head and shoulders invest. Now let's have a look at some other stuff. Now this is where the lagging indicators come in, and these are the indicators I genuinely just don't like. I know a lot of people use them. I just don't really see the point. Right, your Bollinger Bands. You've got to be sort of very, very wary of something when using Bollinger Bands. This, when we have these Bollinger Bands that are quite close, right, and you put a buy order in over here, and I don't know, right, you put a buy order here, and you're like, oh yeah, it's going to go up, and it comes up to here, and then it starts reversing, and you sell, and you're, alright, I'm going to close the position, take my profit, and then it starts pumping up even more. Or you put a sell order in here, it will come down to here, okay, that's fine, but it works until it doesn't work anymore, because eventually we might come over here, you're like, right, okay, it's starting to trend down, I'm going to put a sell order in, you put a sell order in, and then you get absolutely shafted because it starts pumping like mad. That's exactly why the Bollinger Bands aren't really useful, because we can't predict where it's going to go from here. And this is the exact problem on here. The one thing that you can use for Bollinger Bands is obviously when we start trending upwards, we normally do come closer to the middle Bollinger Band. And again, we come up and we come close to the middle Bollinger Band. And that, if it trends for another week, maybe this might come up to about 52 and then maybe like 54 and so on. This is a good indication to say that maybe we are going to come down to roughly about this price, and that's another good indication that we put a head in. So that is one way to use them, but other than that, they don't really do much. This previously was just obviously a big pit open below us. You've got to bear in mind that when we have these trends upwards, and the Bollinger Bands are not starting to get tighter again, so obviously over here the tight, there isn't really much room for movement. When they start widening up, again, if we come up quickly, there's a very high chance that we can obviously come down quickly as well. So that's something to be wary of about the Bollinger Bands. I personally, I'm not a big fan of these indicators, purely because of the fact that, yeah, they can show you, for some sense, where to buy, where to sell. Like, you could put trade in, like, alright, I don't know, I'm going to buy here, and I'm going to put stop loss below here. That's okay. And again, put a sell order, maybe it's, I don't know, it comes up to here, actually, for example, right? Before the Bollinger Band starts moving upwards. You put a sell order in here and put stop loss here. That's fine, you can do that. But that's still, you're still losing money. It's not really a wise idea to really use the Bollinger Bands. They're not really the best of indicators to use. Next, a MACD and the RSI. Alright, let's actually have a look at the MACD and the RSI. Right. Firstly, these are actually okay. The MACD is to some extent lagging. But the MACD, as you can see, currently on, well, that's the weekly, let's go to the daily. As you can see, the MACD did roll over, and we haven't actually, as you can see here, if I zoom in, we haven't actually managed to get back above, we haven't actually managed to cross again, which is an indication that they could start spreading again, because there's not enough bullish momentum in the market. And again, with the volume, there's not enough volume over here compared to what we were having previously. We are genuinely not having very much volume, whether that's buy or sell. The market is very much at a standstill. Again, over here, as it will come down. We basically just gone stagnant. It's just likely that if we do start getting some sell pressure, today is April Fool's Day. If we start getting some sell pressure from maybe the next couple of days when the market start opening up, but we have no buy pressure because we've got no buy orders, it's likely that these might be, we'll see, you know, it's still not crossed. We could start trending down again. And again with the RSI, it just shows a downtrend again, the spreading. So the wider the RSI is normally, the more it's going to go in one direction and so on. So that's something to be wary of. I'm not sure what all the indicators are on here that are actually useful. Yeah, the rest of these are practically useless. A lot of these indicators you gotta be wary of, right? So it's like something like this, right? What is that? What actually is this? This, right? So when you have a trend downwards, I don't really understand this indicator. It's kind of a useless indicator. It's again lagging. You will only it'll only switch to the other side. So basically, so this is indicating a downtrend. This is indicating an uptrend. It'll only switch to the other side once you put a couple of candles in. So if you're trading like that, that's fine. But you can also have like one and then it switches back around again. They are lagging indicators, and that's why I don't use indicators. The best thing to, in my all honesty, to do is to just look at the chart completely raw and look at your chart patterns, figure out what's going on, look at the volume's fine, the MA, the EMA, that's fine, use those sorts of things, and just look at where the market's going. Because you've got to bear in mind that yes, the market is obviously chart based, but also it's also emotion based, because you've got to also gauge what other people are doing. And as of right now, our volume does indicate that we are starting to go maybe a bit more stagnant in volume. We haven't really, you know, we're not really doing much in terms of volume compared to what we were. Like, I know this volume looks like a lot right now on our chart, but if you actually zoom out, it'll let me zoom out. This kind of volume, there's not really much volume here. As you can see, there's not very much volume. We came down, we weren't having very much volume on the way down either, as you can see. They only start putting more volume in over here. And the likely reason why we weren't having very much volume over here compared to what we are having over here, again, is purely down to the fact that obviously, look, there's not many buyers, not many sellers, but the sellers are still overweighing the buyers, hence we're going down. And over here, the buyers were overweighing the sellers. And then obviously over here, we're having absurd amounts of volume because we were in a very high liquidity range. Because see, around here, we're just straight up, straight down, straight up, straight down, basically. There was still consolidation at the end of the day. And also when we came down to 15,000, that was an absurdly high volume. That was the highest volume recorded on that day. And then again, high volume when we started pumping up. Now this is something that's good, obviously, when we had this high volume up here. This is something to look out for. If you have a large amount of volume, either going up or down, and you see the candles going up as well, that's an indication that this is no longer really a fluke, and we are actually starting to trend up, and that's exactly what happened. And then also we've gone stagnant on our volume again. And also we've been stagnant for quite some time. If we actually take a look here, yes, these volume peaks look like they're big, but the volume peaks are mainly only big on the uptrend. I mean the downtrend. I mean, so the red candles are always got higher volume than what the green ones have. So something to be wary of. That's just something on indicators. And if for those of you who watched that part of the indicator video didn't like it, that's exactly why. Because the indicators are they're not really that useful. The volume's okay. The MACD I'm not a big fan of. The RSI's okay. And then you've got your EMA and the MA ribbon. The Bollinger Bands, they don't really do much, in all honesty. Yeah, some people might use Bollinger Bands. And you get a lot of these YouTubers that'll tell you, alright, use the Bollinger Bands, use this, use that. They're not really something that you should be relying on. You shouldn't really rely on indicators, because most indicators are just lagging. What you want to rely on is the chart, and look at the chart and what's going on. The volume's obviously important. But the rest of them aren't going to be as important as what, you know, you'd think. They keep getting ads in the corner. Right. From what we've gone through on the Bitcoin chart, there are signs that we might start trending higher. And the chart, because we are in a bullish environment, everyone's saying we're going up here. We might have a trend maybe down here, come up, down here, and something like that. And if that happens, that'd be great. The likelihood of that happening maybe is possible. Obviously, this is still Bitcoin related, so we are going to go have a look at the dollar quickly and see what the dollar's up to. The dollar's always tends to be quite a good one to look at. Right, if we take a look at this, the dollar's getting weaker and then it got stronger again. So this is a likely sign that since the dollar is now going up, Bitcoin may possibly start trending down. And that's something to be wary of, because when this does start trading again, we will start trending downwards. Because as the dollar goes up, Bitcoin tends to go down, and the opposite is normally seen. It's not obviously always, but it's something to be wary of. That is normally what happens. So that is something to be wary of. If you take a look at the S&P in regards to Bitcoin, so not in the sense of looking at S&P, I'm not going to analyze it. If you take a look at the S&P, again, this is basically just in a channel that broke out, and let's see, we had a cup and handle pattern over here. So again, a lot of these charts are just basically stagnant at this current moment, especially Bitcoin, because obviously we've had this big move up. We need to consolidate for some time. What the healthiest thing for Bitcoin right now would be is we stay here, we do this pattern, and then we go up. Or maybe we just have mumbo jumbo consolidation. We just I don't know, we come up, just some random consolidation, and then eventually continue going higher after the halving. The halving is, where is the halving? It's like somewhere over here. It's like over here somewhere. Which is quite a good indication that we're not far from the halving. So if that does happen, we can see some nice uptrend, and that'd be good. One other thing to keep into mind is be wary that since we have on this monthly chart, now I want you to take a look at this, right? Let's just count candles here. 1 monthly candle green, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7. Now, and this one looks like, wait, this is April, this has just started, the month's just started. Be wary that this is probably, how far back does this chart go? This goes back to 2017. From what I'm aware, I don't think we've actually had more than 7 green monthly candles, like, probably ever. Even in an uptrend. This is in a full bull market, by the way. This is in a full bull market, this. This is still in the consolidation year, and we are not in a full bull market. So this is something to be wary of, that obviously, yes, we have trended up so quickly, but you've got to be wary that since we trended up so quickly, the trend down can also happen quickly. And what would be amazing, obviously, like I keep saying, is if we trend down to 52, that would be perfect. Some nice support at 52. Again, we had a nice little bounce at 52 here, 53-ish. If we have a nice bounce and we come down, that is a perfect area. If we take the Fibonacci retracement, draw something like that to the bottom. That's going to be a dodgy fib. Look exactly, right? 51, 250. If we come down to here, that is the best case scenario that you would ever expect, because we had a nice healthy trend up. Well, that's not healthy, that's a ridiculous trend. Had a nice ridiculous trend up, and then, so everyone's got their lube out and got, very happy, and everyone started buying in, and everyone's going, oh, Lambo coming, right? But if we have some nice consolidation, mumbo jumbo trading down to here, and then the halving happens, bang, straight up. That would be amazing. That's what I'm hoping for. Obviously, on the contrary, if that is not what happens, then this could be very harsh for Bitcoin. We need healthy corrections, because that's part of a healthy market. This nice uptrend is cool, but we needed, obviously, a correction. We had a correction, and we didn't really go much higher than that. And then, also, we had our bear market year, and that's what happened. So now that we also start trending upwards, I want to see some sort of maybe correction, either 20% back down, maybe not even 20%, maybe just a little bit further down. And then, again, maybe come down to here, maybe put a monthly candle in over here, The halving happens, maybe since obviously we haven't had a downtrend for a while and the halving's not happened. Normally, sometimes after the halving, you can have a bit of a dump as well. And it won't be obviously an absurd dump since the halving's happened. It might be 20% or something. Maybe if we put candle down to 60k by the end of the month, and then the next month maybe put down like a slight maybe dump down to here, and flash dump, come back up, and then we start trending high from there, and that's it. We're off to the moon. But you've got to bear in mind something. While obviously we can sit here and guess what's going to happen, 20% correction already has happened. So 20% correction is fairly healthy. I'm hoping for a slightly more correction. But if that doesn't happen, that's fine as well. Because we are still technically in a healthy market before the halving. It's like though we are going to trend to some extent slightly higher. And then obviously the halving happens, and then, yeah. So for those of you who do not know what the halving was, the video is up on my channel if you want to go watch that. But post-halving, where is the halving? It's over March, April, yeah, so the halving's about here. We had some mumbo-jumbo consolidation over here, might have come up. Had a nice peak over here in August, that's something to look at. And then so we came back down, had some mumbo jumbo price action, and then as into the new year, so if we go into 2021, we had, let's see, our peak upwards, and then this was until April, and that was until November, April, May time. So you've got to be wary that yes, obviously it might be a downtrend for a short period of time, but yeah, also something to be actually look at here, right? If, let's just put this into perspective, and I'm going to have to go on, like, can I go on these charts, or do I have to pay for these? Right, I guess I can, right. Let's get rid of this, and let's go over here. This is from till 2017. We have put quite a few bullish candles in, and again, bullish candles in. These candles, obviously, exponentially speaking, we are going to obviously go higher. That's what most people assume. Again, if we go onto the monthly chart, and we actually have a proper look at this, if we've also had this insane trend upwards already, right? Which is fine. That's completely fine. We've had this insane trend upwards already. And obviously, this is what would happen normally in a bull market. This is our bull market trend. This is not a bull market. This is consolidation. This is the consolidation year, because you'll see, like I said, you have your start of your year, then you got your bear year, so you got the bull year, so it goes bull year, you got bear year, and then you've got consolidation year, which is normally where we consolidate back up to all-time high. As you can see, we consolidate back up to all-time high, give or take. This time we didn't happen, because of the COVID dump. We consolidate back up to the all-time high, roughly, give or take, and then after that, the next year is obviously, you know, where we start moving upwards, and then in the new year, the new cycle is where we start pumping. That's the Wall Street market cycles, the Bitcoin market cycles. That's normally what tends to happen. Obviously, that's the past doesn't obviously represent the future. But if we start trending, let's say the halving happens over, where's the halving? It's like, it's here. Where's this month? Let's say the halving happens, right? We don't have any considerable dump. Where are we actually going from here? Because after that point, it's basically just, right, okay, well, the halving's happened. Where's the downtrend? And we just go up, and then we continue going even higher, past where the chart can actually go to at this point. I think I can full screen show whereabouts. I don't think I can, right. We start trending even higher, keep going higher and higher, which would be great. But again, we need some sort of healthy correction. So something like, yeah, something like that, and then we go higher. That's exactly what I'm hoping for. Even one monthly red candle would be amazing. If we close this candle red for the month, that'd be amazing. And then after that point, you can be like, right, okay, we've had a slight amount of correction. We can continue moving higher. That would be perfect. Otherwise, after the halving, you could probably expect that we are most likely going to have a harsh dump. And not obviously this harsh, that's a bear market year, but something, we might have like a 40%, maybe a 60% dump, which wouldn't be what we want after a halving. You can obviously have a 20% trade, 20% down, and then we have obviously some consolidation, and then we go into the halving. So we've gone into the halving and then we start trending upwards. That's fine as well. And that's exactly what's currently happened on our weekly chart. We had about 20% dump down here, and then we start trending back up. That's fine. But I'm hoping we have a bit more of a dump, because that'll give Bitcoin a lot more strength to move and run a lot higher. If we maybe have a bit more of a trend downwards, we come upwards, and then that's it. That's amazing. Now I'm going to quickly show you some short-term analysis so we can have a bit of a look at this. Right. As of right now, Bitcoin, I'll see it came down. This is known as a bullish divergence. You can draw it either like this, or you can draw it something like this. I prefer to draw it from the back of the candle, purely because of the fact that it's more reliable support because it's further up. That's how I tend to draw it. This is obviously a support line. This is the exact same thing that happens after we dump. We have a nice dump downwards. This is obviously on the 15-minute. We come upwards, we have a bounce, and then we trade upwards maybe a bit more, and then we have another bounce, and then trade upwards a bit more, then have another bounce between some sort of resistance. Maybe the resistance is something like this. That's fine, okay? But you've got to bear in mind that these sorts of trends only happen prior to another move down, because you have to have a move down and then some consolidation, and then we move down further. So this is something to be wary of on the short-term time frame, that we might be seeing slightly lower prices for maybe going into either today or to tomorrow. It's also not guaranteed. Sometimes we do have these consolidations. This is why you shouldn't rely on these sharp hands completely. You can, as I say, you know, we trend up to here, and then bang, we're back up there. That's also possible. Normally, the way I look at it is when we have a V, so like something like this, and we trend back up like this quickly, that's normally an indication that the market has a lot of strength in it and we're going to go higher. We don't have that kind of strength. This is what we can dump down to 68, maybe 800, 68, 900, and we've managed to only get up to 69, 800, 900, about 70,000 basically. That's a K range, and that's fine. But again, that's an indication that we might be going lower, since we started all the way up at about 71,400. Now that normally is exactly what tends to happen on these charts, so be wary of something like this when you're looking at the market today. I will do a meme coin video today as well. I don't know if it'll come out today. I don't know if this video will even come out today, I'm not sure. The reason why I said I was going to do these market analysis videos once every couple of days, because there's not very much to analyze unless you also, you know, do them once every week or something like that. For now, I might do them once every 3 or 4 days, and then after a while, I might start doing maybe once a week, so we give the market some time to move around, and then I'll see, you know, we go from there. The only reason why I made this video is because I saw this dump today, and this is something to be wary of, that while this is technically still a liquidity hunt, this could start trending further down as well, so be wary of that. If you guys like this video, like and subscribe. If you have any recommendations, put them in the comment section. If you want me to analyze anything in particular, those videos will be once a week. This like random Bitcoin video, this is just, you know, random analysis I put up. The analysis videos where I do the S&P 500, gold, silver, Bitcoin, everything, those videos will only be once a week still. So if you want me to analyze anything in particular, put it in the comment section and I will do that. And then I might do a meme coin video today. I haven't actually gone for meme coins yet. And yeah, like and subscribe, and I'll see you guys later. Goodbye.